Forthwith. The Honourable Minister of Finance.
Mr Speaker, I move that the Appropriations 2012-13 Estimates Bill be now read a second time. Mr Speaker, it's a privilege to deliver the National-led Government's fourth budget. This budget is about investing in our future. It shows the Government is responsibly managing its finances. We're on track to post an operating surplus in 2014-15, when we will start bringing debt down to prudent levels. That is a considerable achievement given the difficulties New Zealand has faced over the past 3 years. A sharp recession that started in early 2008, the global financial crisis which is still being felt around the world, and the destructive earthquakes in Canterbury. Good fiscal management is important because it helps us pursue the other three priorities of this government. The first of these is building a more productive and competitive economy. The New Zealand economy lost competitiveness and built up large imbalances during the 2000s. These balances have to be reversed if we are to achieve sustainable growth. The budget is another step in creating an innovative and productive economy that sells more to the world, where people have the jobs, opportunities and higher incomes to get ahead here in New Zealand. Secondly, the Government is committed to delivering better public services. The budget shows we are continuing to reform public services to deliver better results, protect the vulnerable in our society, and at the same time bring down many of the long-term social costs that drive public sector spending. And thirdly, the budget continues the Government's strong commitment to rebuilding Christchurch and surrounding areas. Collectively, these priorities are about building a brighter future for New Zealanders from all backgrounds and all walks of life. Working constructively with the ACT, United Future and Maori parties, we will continue to make balanced and fair decisions to support all New Zealanders through challenging times and put the economy on a more competitive footing for the longer term. Mr Speaker, the New Zealand economy has grown modestly but steadily despite significant headwinds. The efforts of all New Zealanders, supported by the Government's policies, are delivering results in difficult circumstances. Since the recession, the economy has expanded in 9 of the past 10 quarters. Looking ahead, growth is forecast to rise to more than 3% in 2014-15. Though moderate by historical standards, New Zealand's growth outlook is stronger over the next few years than that forecast for the Euro area, the United Kingdom, Japan, the United States and Canada, and it's similar to forecast growth in Australia. Households and businesses have started to save and pay down debt. New Zealand's household savings rate is positive for the first time in a decade and is forecast to increase to almost 4% of GDP by 2016. That is a positive and encouraging sign. Increased savings will temper economic growth a little in the short term, but over time will leave New Zealand considerably less vulnerable to economic shocks. Job creation is picking up. Over the past 2 years, 60,000 more people have been employed, and the Treasury expects a net 154,000 new jobs over the next 4 years. Unemployment is forecast to drop below 5% by 2015. Growth in the near term will be driven by a number of factors. The rebuilding of Christchurch will be a key driver of domestic activity and is expected to contribute about 1 percentage point to annual growth in each calendar year from 2012 to 2016. Our 2 largest trading partners, Australia and China, are forecast to maintain reasonable growth rates, therefore keeping up demand for our exports. We're also well placed to benefit from trade with other fast-growing economies in the Asia-Pacific region. And our terms of trade are expected to remain relatively high on the back of demand for our major export commodities. These opportunities will be supported by government policies to encourage businesses to invest, to grow and to employ. However, the global environment remains volatile. In particular, the Euro area and the United Kingdom have yet to resolve the huge problems caused by a long-term reliance on debt and government spending to drive economic growth. This global weakness and volatility means New Zealand must focus on the issues it can directly control, including getting back to surplus, reducing government and private sector debt, and improving competitiveness. New jobs are created and incomes grow only when businesses have the confidence to invest, take risks to employ more people, and pay better wages from higher revenues. Growth in the 2000s was built on unsustainable foundations, excessive spending, including from the government, and high levels of household debt. We are moving towards growth that is driven by savings, exports, and productive investments in the parts of the economy that trade with the rest of the world. It is within this context that I present Budget 2012. Mr. Speaker, I want to talk first about responsible financial management before I go on to talk about the three other equally important priorities of this government. Over the past 3 years, the government has faced very considerable fiscal challenges. In 2008, net government debt was $10 billion. Today, it stands at $50 billion and is forecast to reach more than $70 billion before we return to surplus and start paying down debt. That build-up in government debt has been the appropriate response to the triple shocks of a domestic recession, the global financial crisis, and Canterbury earthquakes. The alternatives would have been to dramatically slash spending or dramatically increase taxes, both of which would have brought considerable pains to households and damaged the economy at a time when the recovery was still fragile. The government chose to run larger deficits and absorb much of the impact of these shocks on its own balance sheet to protect vulnerable New Zealanders and enable the economy to get back on track. But as we made clear at the time, this could not continue indefinitely. So the government maintained spending but slowed its growth significantly. As an illustration, over the last 4 budgets from 2004 to 2008, the previous government's final year spending on new discretionary operating and revenue initiatives totalled $15 billion. For this government, the corresponding figure over 4 budgets is about $750 million. This government's discipline means New Zealand is on track to return to fiscal surplus in 2014-15 and then to start reducing debt. The forecast fiscal surplus in 2014-15 is $197 million. This surplus is forecast to grow to $2.1 billion in 2015-16 and $4.4 billion in 2016-17. These surpluses will allow the government to rebuild New Zealand's resilience to future shocks, help lift national savings, keep interest rates lower for longer, take pressure off the exchange rate and reduce future finance cost. A significant surplus will also give us choices when it comes to public services, which we don't have while we're running deficits. This budget takes a number of balanced decisions to ensure the government reaches surplus in 2014-15. These decisions include running a zero budget again this year, where $4.4 billion of new operating spending over the 4-year forecast period is matched by a combination of savings and revenue initiatives. The government is making significant new investment in priority areas, while at the same time keeping a tight rein on growth in spending and public debt. In terms of savings initiatives, we are continuing to reprioritise existing spending to ensure New Zealanders receive better public services, especially in health, education, welfare, law and order, and science and innovation. This will allow core Crown expenses to fall progressively from 33.5% of GDP in 2011-12 to 30.2% of GDP in 2015-16. We are also focusing on improving the effectiveness of spending across the board. Effective public services that get results are good for individuals and their families and will also generate sustainable long-term savings. In terms of revenue initiatives, the budget continues the government's focus on broadening the tax base, closing tax loopholes and improving the fairness of the tax system. This builds on measures introduced in budgets 2010 and 2011. The Inland Revenue Department will receive an extra $78.4 million to further improve its tax auditing and compliance functions. These extra compliance activities are estimated to have a net positive impact on the operating balance of $345.4 million over the 4 years to 2015-16. We're also broadening the tax base by tightening the rules for deducting costs of assets that are used both by their owners and rented out for income, such as holiday homes, boats and aircraft, putting changes to livestock valuation rules into budget legislation to prevent farmers who change valuation schemes receiving an unintended tax break, and removing 3 tax credits that no longer fit the purpose for which they were created. Together, these changes will save about $410 million over the next 4 years, and I thank the Honourable Peter Dunn for his work in this area. Mr Speaker, when the budget is in sufficient surplus, the Government is committed to resuming contributions to the New Zealand Superannuation Fund. On current forecasts, this is expected to happen in 2017-18. Furthermore, decisions will also need to be made on the rate of debt repayment to meet the Government's longer-term objective of reducing debt to 20% of GDP by 2020. Resuming New Zealand's superannuation fund contributions and repaying debt will require an ongoing commitment to responsibly managing surpluses. Budget 2012 proposes changes to the fiscal responsibility provisions of the Public Finance Act to reinforce fiscal disciplines. We are proposing additional principles for Part 2 of the Public Finance Act, which ministers will have to take into account when setting fiscal policy. These changes will bring more transparency to government spending decisions and how they affect the wider economy and future generations. The Government is also consulting other political parties about the possible introduction of a spending limit as set out in the National Act Confidence and Supply Agreement. I acknowledge the initiative on this issue of the Honourable John Banks. Mr Speaker, the new operating allowances for future budgets remain as they were. Mr Speaker, the new operating allowances for future budgets remain as they were at $800 million for Budget 2013, $1.19 billion for Budget 2014, and thereafter rising at 2% each budget. This allows the Government to maintain some flexibility to deal with future spending and revenue pressures while still achieving a surplus in 2014-15. Mr Speaker, as I said earlier, good fiscal management is important because it helps us pursue the other 3 priorities of this government. So I want to turn to the first of these, building a more productive and competitive economy. The budget continues to support the wide range of actions the government is taking to raise productivity and therefore create more jobs and raise incomes. And I want to mention just a few of them. Budget 2012 contains $385 million of new investment over 4 years in research, science and innovation. We need to support businesses and farms to innovate and stay ahead of the competition, and we need to ensure New Zealanders have the right skills to compete in an increasingly global economy. Over the next 4 years, Budget 2012 investments include $166 million to redevelop an advanced technology institute, which will help New Zealand's high-tech firms grow, increase exports and ramp up productivity. $60 million to support a series of national science challenges, which will seek innovative solutions to specific questions of national significance. $100 million additional funding for the Performance-Based Research Fund to support world-class research in New Zealand's universities. $59 million to boost funding for science and engineering courses. Funding rates for engineering degrees will be increased by 8.8% and for science degrees by 2%. In its first 3 years, the Primary Growth Partnership has stimulated more than $430 million in research and development investment from government and industry. A further $270 million of investment by government and industry is awaiting approval for business plans or in contract negotiation. Mr. Speaker, Budget 2012 continues the government's program of investment in productive infrastructure and other major capital projects. In particular, the budget establishes the Future Investment Fund. This fund will receive all proceeds from the government's sale of up to 49% of shares in 4 SOEs and Air New Zealand. These proceeds are expected to be between $5 billion and $7 billion. The Future Investment Fund will reinvest those proceeds in other public assets, such as modern schools and hospitals, over the next few budgets. The government will do this without having to borrow to pay for those new assets. We have earmarked $1 billion of the fund for modernising and transforming schools as part of the government's 21st Century Schools program. This demonstrates that the partial sale of shares in the 5 companies does not result in any net loss of publicly owned assets, but simply changes the mix of those assets. The government would rather build new schools and better hospitals without having to borrow more from overseas lenders, while still retaining a majority shareholding in those companies. The share offers will provide New Zealanders with an opportunity to invest their savings in large New Zealand companies and will help to improve the transparency and accountability of the companies. As part of the budget, the Future Investment Fund is allocating its first $559 million. This includes the first $34 million of funding for 21st Century Schools, $250 million towards Kiwi Rail's turnaround plan, $88 million for health sector initiatives, in particular hospital redevelopments, $76 million for the capital costs of the new Advanced Technology Institute. We expect to make a significantly larger contribution from the fund in Budget 2013 once the share offers are underway. In addition, the government is investing around $12 billion in improving state highways over the next 10 years. We're also investing more than $500 million a year in improving and maintaining local roads and completing the $2.1 billion upgrade of the metro rail systems in Auckland and Wellington. Through Transpower, the government is investing $4.6 billion in upgrading the national electricity grid over the next 10 years. New Zealand's size and geographic isolation from the rest of the world means communications technology matters. That is why this government is investing up to $1.35 billion in the rollout of ultra-fast broadband and an extra $300 million in the rural broadband initiative currently underway. Mr. Speaker, as part of the government's program to deepen capital markets, the budget last year made several changes to KiwiSaver. We announced an increase in the minimum contribution from individuals and employers from 2% to 3% to take effect from 1 April 2013. About 15,000 New Zealanders a month are joining the scheme, and since March last year, total KiwiSaver funds have grown from $9 billion to more than $12 billion. Budget 2012 further strengthens KiwiSaver. New disclosure rules to take effect from April 2013 will allow people in KiwiSaver to evaluate and compare the performance of different funds. Fund managers will be required to report their performance and returns, fees and costs, assets and portfolio holdings, and liquidity and liabilities. In addition, the government today is issuing the terms of reference for a review of KiwiSaver default provider arrangements to ensure they are working in the best interests of investors. The government is also deferring its auto-enrolment exercise for KiwiSaver. Proceeding with auto-enrolment in 2014-15 as originally intended is now not possible without putting the updated forecast surplus at risk. Therefore, public consultation on auto enrolment has been deferred until after 2012. In building a more competitive economy, the government will develop initiatives across its business growth agenda. This will help businesses with the research, capital, ideas, skills, natural resources and infrastructure that they need to grow, employ and trade successfully with the rest of the world. That is how the government will support job growth. Mr. Speaker, another of the government's priorities is delivering better public services within tight financial constraints. A better performing public sector is central to the government's plans over the next 3 years. The government wants to see better results and improved services, as well as reduced costs and more efficiency. To assist those changes, the State Sector Act, the Public Finance Act and the Crown Entities Act will be amended as recommended by the Better Public Services Advisory Group.